is chair of the editorial board at the Financial Times. Gillian's with me now. So look, I mean, let's do, it's a big bill, but does it, let's just clear one thing up. Does it have any inflation beating requirements or attributes within it?
Well, I think if this was a brand, I think some of the regulators would say this is slightly misleading consumers, because the reality is it's called the Inflation Reduction Act. Inflation actually is very likely to come down in the coming months, and in fact is already coming down a bit, but for reasons that don't actually have a lot to do with this bill, because the things that are inside this bill could cut households' expenditures in the future, but it's going to take quite a long time to come through. These are things like giving households tax credits if they install, say, heat pumps and other environmentally friendly measures in their houses. Yes, that will cut the expenditures. Yes, it's good for consumers, but it's not going to suddenly yank down inflation right now. But the irony is that inflation actually is falling already anyway and likely to keep falling to a certain degree. And you're certainly going to see the White House taking credit for that, even if, strictly speaking, this bill isn't at the core of that.
Okay, so the climate change, we know it's all, it's the most that the US has ever done. We know all of these aspects to it. If you look at it from an economic point of view across the whole economy, does this give us stimulus in some shape or form? Because in a sense, that's the last thing the economy needs.
Yeah, absolutely. And in fact, there's an awful lot of hand-wringing about the last stimulus packages.
Yeah.
And a recognition that probably overstimulated everything. You really can have too much of a good thing. It's a bit like giving endless cookies and ice cream to a toddler. They'll keep liking it until suddenly they feel sick. And that's kind of what happened last time around. So what this really is more about is trying to shift the US economy onto a more sustainable path in terms of energy consumption. There are things in this bill which will actually be helping to boost the oil sector a bit. Don't expect to hear the progressives talking much about that. Instead, the focus is very much on having green energy measures introduced. But politically, one very important thing to think about is that because America now has these measures for fighting climate change, it can go to the so-called COP27 meetings in Egypt later this year. That's a big gathering of global heads of state talking about how the world collectively can fight climate change. America can now go to that with a certain degree of moral high ground and try to get other governments to actually ramp up their commitments to go green as well. And that matters economically much more widely.
I was reading some of your views on debt lately and the sheer amount of debt that there is in the system. The issue with debt, of course, is it's fine when interest rates are low, but there's a lot of people now, and countries as well, and companies. I mean, I was talking to Scania, one company who we'll hear from later in the programme, who said, you know, as they are refinancing the debt as it just becomes due, and it's at much, much higher levels.
Yeah, it's one of the crazy things that most people have ignored, which is that we had a crisis in 2008, the great financial crisis, triggered by way too much debt. And after that, everyone said, well, one lesson is that we should collectively cut debt. So what happened? Debt dramatically increased. And debt today, as a proportion of global GDP, is pretty much near record levels. It's been going up and up and up. And in the US, as we all know, the federal debt has been swelling inexorably. Now, it's a bit like that Wile E. Coyote cartoon where that character goes off a cliff, and as long as they don't look down, they just keep pedaling furiously and stay up in the air. And as long as the markets don't really start asking hard questions about whether that debt can ever be repaid, it's kind of fine, because investors keep buying government bonds and the yields stay relatively low, and so it's all fine. And debt servicing costs have been quite low. The big question now, though, is if inflation is going up and the Fed is jacking up rates, what is going to happen to that debt pile in the future? And will that Wile E. Coyote character, investors who are sort of ignoring the maths, actually start looking down and panic?
Good to see you, Gillian. Ted, I think you're going to be with us, hopefully, when we have the president a little bit later, if you can stick around. So we look forward to that. Thank you.